Hi there, welcome to Stella Wyckoff Technical Analysis session. If you're new to my sessions, these are the key takeaways you can expect. I'll cover the Wyckoff stages, both current and the near-term next Wyckoff stages, both on the weekly and daily time frames. And then I'll also talk about the key price levels that Stella will find support or resistance, and eventually any breakout time point that the price actions are telling us. So let's dive into the weekly chart first. And what we've seen here is that last week and this week, both weeks, the trading is around this green key level of 33 cents. As of this moment, the candlestick is edging a little bit above it. But the key of this is all these actions are within this downward channel, this blue box. Okay? Previously, we talked about the Wyckoff stages that's going to come, because we are after a last point of supply that happened just 3 weeks ago, near early October or end of this September. What we are likely going to see a higher tendency towards a sign of weakness level that we have seen back in mid-June as well as late March, all within 2025. Okay, and then there is a slight chance for the price to come back up to show us a second test at the blue level, the deeper blue, 47 cents 50. But of course, if the price successfully stays above the green key level 33 cents, it first has to break through the 41 cent light blue key level before it can reach that deeper blue level above. Before we get to the daily chart, let's take a look at the the Bollinger Band current squeeze. The purple lines currently are still way outside of the orange, meaning in the weekly time frame, there isn't a squeeze this moment. If you're new to this Bollinger Band current squeeze indicator, what does it tell us is basically price swing will soon happen after a squeeze. It doesn't tell us which direction it's going to swing first. For these two examples, one back in November 2024, it went up first and then eventually came down. This time, similar. We had a squeeze during June and then the price shot up just to swing back towards the downside. Okay, there are other occasions where the price will go down after the squeeze. So this is just to tell us that a swing is about to happen. Okay, but it can be suppressed for a long period before this pressure actually get released. If we get to the daily chart, that particular squeeze that happened for 2 days was basically triggered by that October 10th event, and now we are not at a squeeze, so we can switch it off and focus on the daily Wyckoff. As of now, we see this that I've put in two scenarios. The first is the red tags, meaning we're getting to a mid-late stage of a distribution cycle. Last time it re-entered the accumulation where the selling climax was about the yellow key level. That's mid-March this year. Okay, currently we are at a similar level to that late stage distribution back in February. Okay, that was a higher peak and then eventually it died down to the green key level and then trade sideways for about 2 to 3 weeks. We are only about 2 weeks in, so it may last longer. So let's see whether that history will repeat this time. If it really comes back down to the yellow key level and find initial support, that's 24 cents 50, it's understandable that after the selling climax there will be an automatic rally. That time back in late March it climbed back to above the white line. Okay, that white line is currently sitting around 27 cents 50. That's the top edge of the long-term playground zone. Okay, that's if you're new to this again, the long-term playground zone tracks a long-term trading area. For Stella, it went all the way back to December 2017. About 70 to 80% of time within this playground zone. That's where Stella was trading. Okay, it's only during the distribution peaks and when it dies down, those shorter period of time was about that particular area. Now that it seems it's potentially coming back to this zone, so that's why this trend is important, because when we get closer and closer to the end of the year, if this trend isn't broken, that it will eventually comes back to this long-term playground zone. Last time it felt much steeper. You see the difference of the slope. Let me draw two boxes, just one maybe. This blue box compared to the one that I'm trying to draw right now. Okay, this, let me change this, adjust this to this side, just to make sure I align the bottom and the top as well. So this is a temporary for illustration purpose only. Let's make it orange. So this orange box, you see the slope is deeper than the blue one that we're going through right now. Okay, that's why last time the distribution finishes earlier. This time we've got a longer run, but it's still trending downwards. Well, in simple terms, people would say lower highs and lower lows. Okay, essentially is the price actions bouncing off within this downward channel box. And what's coming, you can expect that, let's just focus on the blue lines for the time being. I know there are the other two here. I'll explain in a second. Normally, what would happen if it really, assuming this is bouncing off from the bottom edge, okay? There can be a chance that the price got rejected from this center line, this blue dash line, okay? And come back to the bottom edge of the box. The second scenario is for it to go straight through it and then test the ceiling of the box before it comes down. That happened back in the beginning of this month and also sometime around mid-August. And obviously this one was the buying climax back in mid-July. So that's how the usual behavior of the price movements is. So for Wyckoff stages, if this really happens in such a way, then eventually we will have another lower high within this box. Okay, and then eventually it comes down, and this point, if it really comes back to below the white line, that's why we have this preliminary support over here, saying it's probably re-entering the accumulation cycle, because back then here during March all the way to July, that 4 months, that's when the accumulation happened in the daily time frame. This time maybe it will happen this way, or if according to the weekly it's really following a bigger downtrend, then by the time it gets to here, whether it's going to finish at this point and accumulate, or if in the weekly that's actually not a sign of weakness but a leg all the way down to the selling climax, that means going to the red key level or below, then this can still stay as preliminary support, but the selling climax may not finish around this level. Okay, it will probably come down to the red. That's the point I'm trying to bring out, because this box right now is very key. If it doesn't break, the price doesn't break outside of the box, by the time we get to around end of the year, currently it's pointing at somewhere around December 31st and January 1st. If the price still continues to trade within this box, and if it eventually gets into this triangle, staying above the green key level, assuming it can happen, then by then there will be a breakout event telling us, is it going to break outside of this downward channel, or that's not even the hope. It will still continue to go down. But what's going on right now in the past 2 days, today and yesterday, it seems to struggle to go past the green. So what happens would be, it may come back down from the center line, this blue line that I have mentioned, and trade just within the lower half of the box. That can be one way that things can happen, and eventually gets back to the accumulation cycle that we already talked about. Okay, so yeah, still I won't say that's 50 now. What are we saying in the, yeah, over here is 75.25. Let's align the two. 75.25. The potential to get to the upside still exists, but it's of a relatively lower chance to going to the accumulation cycle, because not only that it's finding challenge going past this green key level, there are two levels over here. This white dashed line is formed by these two signs of weaknesses back in September. Okay, that's the first point it has to go through. You see what happened here on October 13th and 14th, just a week ago. It went up just to got pushed back down to where we are, or below the green key level, immediately when it passes through this white dashed line. Not to mention it didn't even get close to the yellow. The yellow is where the other sign of weakness was back in early August, and also some top of these rejection candles here happened. Okay, so these two are intermediate resistance that the price has to go through before it can even challenge the light blue key level for 41 cents. That's where a couple of LPSYs got their rejection. Okay, so it has to be some very positive news that triggers prolonged positive sentiments for the price to be able to get through these three levels in order to get to this 25% chance to challenge this deeper blue key level of 47 cents 50. That's how to interpret the chart, at least for me, that I'm sharing with you now. Thanks for joining me today. I'll move on to the next session. See you.